Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 17th of November. All right, the key theme at the moment, the dollar steady as US jobless claims boost Fed rate cut bets. Now, the Fed cutting rates, it's not going to happen anytime soon, maybe by the second quarter of next year. But let's just have a look at these numbers, right? The jobless claims, slightly worse than expected. The industrial production numbers, which didn't get much of a mention, were much worse than the forecast. And that's sort of should lead to a lower dollar. But we aren't seeing that follow through just yet, right? We're looking for that final straw to break the camel's back. And as you can see on the major currencies, right, you're seeing this sort of price action. The market's still grasping onto, is the dollar really going down, right? Is the Fed done? Once they work out and their systems all come into play, I think we'll see one, maybe even second tier number that is the straw that breaks the camel's back and everything sort of drops very quickly. I'm expecting a decent downside move from here. And if you look at the equity markets, they are sort of paused here, but they are sort of leaning towards higher levels. And you know what? They were leading the charge before the CPI. So keep an eye on those equity indices for further direction. All right, now let's just have a look through what we've got coming out today. Now, UK retail sales figures, it's probably the key event, right, as far as an economic number goes. We've got ECB President Christine Lagarde speaking as well. On the North America session, the housing starts, US housing starts, maybe something to grab onto, but really with so many central bank officials speaking, okay, Bank of England Green, you get a bunch of Fed officials, Christine Lagarde. This is where it comes back to, if you are looking for, say, some momentum on an instrument, keep an eye on sterling, right? The one thing why the US dollar is not falling just yet is because we're not getting stronger numbers out of Europe, UK, Australia, New Zealand, Canada, right? That's what we're waiting for. Now, US bond prices are up, means the yields are a little bit lower, and the dollar, well, it should be falling against most things. But as you can see on the charts, it's not really going too far. Equity indices should keep angling higher, and we should start to see, well, you'd think Euro, Sterling, Aussie, Kiwi start angling to the top side. But once again, we're not getting that other side of the equation where the local data is connecting. Ideally, you'd love to see strong UK numbers today, and that should give Euro, Aussie, and Kiwi a little boost to the top side and push the dollar down a bit, right? And same with those US housing data. So keep an eye on that as we go forward. That's the key to it. Good luck. Happy trading.